Yesterday, my team, we five lenders, had our biggest year ever. We closed 240 million in self-storage loans. On the SBA side, 50% of all the self-storage loans in the United States last year that closed, 50% of those were ours. Today, early May, we are on track to close 320 million, which is staggering. And that's just what's in our pipeline. That's not even net new stuff that's coming down the track.
Many people in the self-storage industry today are telling you, hey, construction deals are dead. They're done. Our guest today has got a completely different storyline with what's going on with her pipeline. Welcome to the Self-Storage Report. I'm Chris Berg with Abernathy Development, doing land acquisition. If you've got a great piece of dirt, maybe in California, Arizona, that you think might work for self-storage, reach out to me and let me know. And of course, subscribe here to the YouTube channel to be the first to know as we release these great episodes of the pod. With us today, Anne Mino. She's a senior loan officer with Live Oak Bank. They're the biggest SBA lender in the country, and she's just got some mind-blowing data today about what's actually happening with deals in self-storage. So, Anne, it's great to have you. Welcome to the show.
Thank you. Great to be here.
So before we dive into the mind-blowing data that you've got, just to give people some background on you, you've got a tremendous amount of experience in the industry. Share with us how long you've been doing this, how many deals have you underwritten, so we can fully appreciate what we're about to hear today.
Thank you. Yes. So I've been with the bank for about 13 years. I've been on the self-storage lending team for 6 years. I'm somebody that I do consider myself an industry expert. I write articles, do, podcasts, lots of webinars, lots of education. Education is probably my favorite part of my job, helping people understand how they can attain, this passive income stream for themselves, even particularly people that don't have any experience at all. Um, how many loans do I do a year? Oh, it feels like a ton. I'm going to say on average 40 loans, I think I didn't actually mine that data before I came in.
But if you're doing 40 a
Yeah.
year, then how many would you say you're underwriting? About 5x that, 10x
Um,
that a year?
that's a good question. Probably, I mean, honestly, I win a lot of my deals. I'm very happy with my flow. But for those 40 that I get across the finish line, let's say maybe I underrate 70, I would
Okay.
say, maybe less. I mean, I work really hard to retain my customers.
I guess what I want to share with you is bottom line. She's seen a lot of deals all over the country to give you an idea of, hey, what's really happening now. Let's dive in. Ann and I had a chance to visit yesterday. We'll get into more of that. We're going to talk about how you can utilize the SBA for building generational wealth with storage and if that's the right capital stack for you. Before we get to that, though, Ann and I jumped on this morning and she's like, hey, Chris, I mined some data with the bank and here's what I found. And my mind was just blown. Can you share that with everybody?
I can. Okay, so I'm going to back up a little bit. So what you should know about our team, we've been doing exclusive self-storage lending for about 10 years. So there's 5 lenders on my team. All we do is self-storage. If you have other types of loans, you can reach out to me, but my team just does storage. We have a $1.7 billion storage portfolio. To date, no defaults. And I like to tell people that, not to brag, but to say we're doing good loans for good people for good projects. Okay. We do say no a lot. So of let's say the 40 deals of mine that make it into to underwriting, maybe those other 30 that I looked at weren't good deals. And I will always work with my customers to see what we can make work. I do a lot of educating, but I do say no. And I want people to trust me when I say no. It probably means you should walk away from your project. So some staggering data here that I mined this morning. So yesterday, my team, we five lenders, had our biggest year ever. We closed 240 million in self-storage loans. That was on the SBA side. So we do conventional and SBA. But on the SBA side, that's 50% of all the self-storage loans in the United States last year that closed. 50% of those were ours. So that's
And you guys did last year to 240 million.
240 million.
And that was your best
No,
year ever.
that was our best year ever. Okay, so today is May 14th.
We just pause for a moment because when I go to the conferences, everyone's just like almost in tears, right? Like, hey, the business is the worst it's ever been. It's the worst I've ever seen. These are, I mean, very well-to-do veterans in the industry. And here you are going, hey, we did our best year ever last year, Chris. That was last year. And I didn't mean to interrupt you, but just to give people some context, what's happening today that you found out?
So today, on May, early May, we are on track to close 320 million today. Now, I'm gonna knock on this little wood table right here. Things may fall out, but we're only in May, so if things fall out of our pipeline, they're gonna probably build back in. But right now, 320 million, which is staggering, and that's just what's in our pipeline. That's not even net new stuff that's coming down the track.
And
So
that's
that's
all
pretty
self-storage
amazing.
deals.
We will structure your deal however it's appropriate for you. So right now, out of that 320, 75% of that is SBA. It's a mix of 504 and 7A, and then about 25% that is conventional. All you really need to know is that when you come to us, we're gonna put together the right loan structure that's appropriate for your project and your long-term goals.
And then to go one step further, so she's saying, "Hey, 320 million, last year, best year ever, 240, this year, 320." And as I said before, if you talk to anybody industry, hey, construction's done, nobody's developing right now, and yet, what percentage of this 320 million is construction in your pipeline?
46%. Yeah. So we're 46% construction, 34% acquisition, 12% expansion, and I wanna talk about expansion for a little bit because I think it's an underutilized, product, and then 8% refi, which the refi actually surprised me. I'm getting a lot of, uh well, I shouldn't say I'm getting a lot of, but I'm surprised there aren't more refinance requests going on right now just because people are coming out of their 3 and 5-year fixed rates from, 5 years ago when rates were, so good that we don't wanna talk about it right now.
Exactly. So, again, just blown away that it's 320 million considering last year was your best year ever in storage, especially considering the storyline that's out there in the industry. So, I would consider that to be maybe good news, definitely very intriguing. The piece that I'm curious about, because again, you're seeing so many deals. What are you seeing right now in the industry that's concerning you?
Well, so there is oversaturation in certain markets. You can take one state in particular and break it down into major metropolitan areas, and some are really overbuilt and some aren't. So location matters. I think it matters now more than ever. There are, when we think about storage and we talk about competitive analysis, a 3 to 5 mile radius is our normally what we talk about. That's your competition. I think you have to pay more attention today more than ever to what is going on in that market beyond the 3 and 5 mile radius. Are people moving there? Are people leaving? Are there data centers coming there, or is the other companies that are actually leaving? I think Austin's a great example where we saw this huge boom, residentially based on business, and that's already starting to wane, right? So that's gonna be happening all over the place. Chris, as we both heard at the California show a week ago, paying attention to what's happening globally that's gonna then affect your market is more important now than ever. That's what I would say. There are definitely saturated markets, and then luckily for storage, there's still plenty of markets where people are moving and storage is gonna continue thriving.
So, with the markets that you're saying are potentially being overbuilt, are you concerned about people just not being able to reach their covenants? Or, like, is it kind of like, hey, Chris, we see their potential for some distressed assets in the future? Or,
Our portfolio remains really strong, to be honest with you. So we require feasibility studies from particular experts for all of our ground up construction projects. Those studies are coming back very conservative more than they've been ever. So we are seeing that. We are definitely seeing projects not working that would have worked 2 years ago. We rely so heavily on that I feel really confident that we're not going to have loans in our portfolio going bad. I think if they're being constructed, and because our feasibility studies, I think, are so comprehensive, because they're going and seeing who's pulling permits in your area. So even if it takes you 2 years to get permitted, we ask for an updated study. The study has to be 6 months old. So I have construction loans. I just closed one, yeah, a huge construction loan I closed yesterday, in Portland. And of course, we had to get that feasibility study updated. And if it didn't come back strong, I wouldn't have closed that loan.
mm,
So I know that once that project is built, it's all boat and RV. I know once it gets built, it's going to work because they went back to the permitting office, saw who's pulled permits. We're doing all new demand research. So
um,
I feel like we do it the right way.
yeah. I want to get into building wealth with SBAs. You and I talked yesterday. We had Brett Henry on last week. He talked about one point where I think he had like 11 or 14 SBA loans he was using. And then he's built obviously a very strong capital stack now. Before we get into that, I'd like to know, we talked about 46% of your deals right now are construction. Where are you seeing a majority of those deals at? Are they scattered everywhere, or do you see certain geographical areas?
The bulk of mine right now are in California. That just happens to
Interesting.
be kind of, I do a lot of business development in California, so a lot of mine are there. But we are seeing them all over in the states that you would expect. So Florida, North Carolina, South Carolina, Georgia, Texas. We're getting more, where would I say, like Iowa, trying to think where, Oregon and Washington are good states for us. Kansas. Yeah, I think that probably hits New York, we get a little bit.
Yeah.
It makes sense. It's the states that people are migrating to. The exception would be California because I think right now there's not a migration problem, but California has a huge population. So it's a no-brainer.
Let's
And you
get
get people moving into tertiary markets out of the major cities, which is
Yes,
where I'm building,
got
right?
it. So what do you consider tertiary in California?
An hour outside of LA.
Oh, okay. That's
Mhm.
good to know.
Uh-huh.
Let's talk about building wealth with SBA loans. And I think what was really interesting you say, Chris, if we say no to a deal, like there's a really good reason why. I wanted to dive into that first so people can better understand like who's SBA for and who's it not for. And I
Yeah.
say that in the context where you're like, we're really good at vetting things. And yet when we spoke yesterday, you're like, hey, there was a person I talked to a while back that, bad credit, this and that. And yet you were like, but we probably would have ended up doing that deal. And that was really surprising to me knowing that, hey, this person maybe wasn't the best prospect for you to say yes to. And yet you're like, yeah, we'll give them a shot.
So SBA, it is there to put money in the hands of small business owners that maybe don't have the ability to put 35% into a project, whether it be a $20 million construction project or a $1 million acquisition. Our clients run the gamut. We have the, you know, absolutely net new to storage people that maybe have a lower W-2 income. They've worked really, really hard to be able to save, what would be a 10% equity injection on $1 million loan. Like, of course, that is part of our customer base. And then we have people that are on the very other end of the spectrum that are using SBA very wisely, which is don't deploy all your capital in one place, right? We talk about you want to build a portfolio. If you use SBA the right way, you can absolutely go further faster with the same amount of money. So if you have $300,000 to invest over 3 years, if you're not having to put 35% into each project, you may be able to pick up 7 or 8 deals without divesting ownership. So it is, in my opinion, always worth it. Like, you can't be focused on rate. Though SBA rates are going to be a little bit higher than conventional depending on the product. Actually, right now, our 504 loan product rates are very similar to conventional. So it is, determined by the product. But regardless, if you can put 10 or 15% into a project and do many projects without divesting your ownership in the long run, you're going to be doing better. And then what I mentioned earlier about expansion, so a lot of people don't know this, and Chris, you and I actually haven't talked about this yet, but SBA will let us treat an acquisition or a construction project as an expansion of an existing facility, and we can do 100% financing. So that's what I really want people to understand is that once you own something, you can buy something down the street as long as it cash flows with 100% financing. So it still needs to look good on paper. Right.
Well, when
It's
you say, like, down the street, you mean, like, right next door, so it's sort of attached? Or you mean, like, down the street, down the street?
could be 6 hours away. There really isn't there's not a geographic limitation. It needs to make sense that it's an expansion of the first business. So you can have them in different entities, which is what I would recommend. But as long as we can justify that you're sharing resources, so ownership has to be the same. You have to have owned the first facility for at least 12 months, so you've got some equity there. And it needs to be reasonable that you're sharing marketing, branding, not necessarily your maintenance person if you have someone doing clean outs for you, but everything else kind of needs to look like I built business A and now I'm expanding it with business B, even if I have to drive between the two facilities a few hours. So much of what we're doing these days is not, there's not somebody on site managing these facilities. It's run remotely. A lot of my customers are in California and they're running facilities in North Carolina. That would be a stretch. I don't know that we could do 100% financing that far away, but as long as it is logical, there really is no limitation
And that's
for
100%
the
fine
100% financing. Yes.
as long as the cash.
Ownership needs to match identically. Cannot be, you can't even have 1% ownership difference, which is why I encourage people to not go out and think you have to raise a whole bunch of money because you want to do a conventional loan, because now you're married to all those investors, right? When you come back to do the second loan, if you want 100% financing, that ownership has to match.
So what do you say to people that might be listening going, hey, wow, that's very intriguing, but boy, that's a lot of leverage.
It is a lot of leverage. We're not going to do it unless it makes sense. It's got to cash flow. So, and I know what your expenses should be. I know what your expense ratio should be. So this is where when you come to an expert, you come to somebody like me that knows self-storage inside and out. If you tell me that you're going to have a 20% expense ratio on your facility, I'm probably going to do a deep dive with you and be like, well, how'd you come up with this number? How'd you come up with this? And we're going to reality test it. We're going to normalize those figures. And I'm not going to do it if I don't really believe that it's going to be possible.
Yeah. So what makes you say no to a deal?
If I don't feel well, I'll give you an example. So I had customers come to me. I had customers come to me last week and there's a facility that's about 40% occupied and they're telling me they're going to get it up to 83% in the first year. Immediately, I'm looking at that going, okay, that feels like a red flag. So I'm very gentle and easy, but I do go back immediately with questions. How are you going to achieve this? Walk me through your plan. And if they can't do that, and even if they do think they're going to do it, I'll still have a conversation with them and say, I feel like this is a little bit unrealistic. This might take you 2 years. I can still do the loan, but I'd like to give you some working capital. I'd like to give you some interest only period to make sure this is really going to work out.
Okay.
But that's a case where, I kind of that's not even a yellow flag, that would be a red flag for me. If we're gonna that feels a little unachievable.
Yeah. So let's dive back into who's the right candidate for you. Like who's the ideal candidate for you, and then walk us through that process, and then what kind of problems can you solve for your ideal candidate?
Ideal candidate is I love all of my customers. You do not have to be wealthy. You do not have to have huge W-2 income. What you do need to have is good credit. You need to come with a plan. Um, you need to have strong recurring income. Again, I don't the amount is not so important as like a 3-year history that I can look back on and say, okay, we've got a track record here that we can depend on. We want to see that you've got your cash for your equity injection and then some post-closing liquidity. That is, I would say, the number one thing right now that people maybe don't realize as much if they're newer into self-storage. And or I will say a lot of people come to me and they're like, I have a huge net worth. And I look at their personal balance sheet and everything's tied up in real estate. It's wonderful to have big net worth. Commercial lenders want to see cash. So I want to see that you've got cash on in checking, savings, stock accounts, easy to liquidate. So if something goes bump in the night, your knee jerk reaction is not, oh my gosh, I have to walk away from my storage loan. So cash is really important. How much cash you have depends on how much you have going on. So if you're a really simple household, you don't have a lot going on, that may not be a very big number. We could be talking about 6 to 9 months of living expenses. If you're a really high net worth individual with a lot of loans out there, that's great as long as we can see that there's income supporting that debt. But I may want your post closing liquidity to be a little bit higher so that it's always about risk, right? So, do you have the capital to weather whatever storm is coming towards us? Could be an economic storm, could be a personal storm. We don't know what it is, but I don't ever want to get the phone call that is, and I can't make my loan payments this month because of XYZ. So I want
So
to save people from themselves a little bit.
let's go through like a simple theoretical example. So let's say there's an asset out there that I don't know. I want to acquire a million, $2 million. What do you want to go with for this example? Does it really matter to you, or
Mm-mm. So let's do 1,000,000. Yeah.
Okay, so it's $1,000,000. I come to you and say, "Hey, Anne, I think this is a really good asset. I want to do an SBA with you. Walk me through how that works. What are you looking for?" And then eventually, when you say yes, and you say that post close liquidity,
Mhm.
I know you said 6 to 9 months, but I guess give me some more
How do we figure
specifics.
that? So it's very organic. This is what a lot of my customers, everybody wants a black and white answer. It's very gray. We are looking at you holistically. So I am looking at what your income is, how many, dependents you have, how much cash you've been able to save, everything. How many businesses do you own? What everything you have going on. I'm looking at all of it.
All right, so I've got $1,000,000 asset. I make 100 grand a year.
Hmm. So, if we're just qualifying this facility, I want to see that you have your equity injection. So on the SBA side, that's going to be 10 to 15%, depends on the loan product. And then when I say 6 to 9 months of living expenses, I'm looking at your household debt. So I'm pulling both credit reports for you and your spouse if you're married. Looking at your minimum monthly payments, I want to see that your income is twice all of that personal debt that you have. I don't care about the business debt because I want the business to pay back that debt. But I do care about your personal debt. Are you over your ski tips in debt? Have you maxed out all your credit cards? Have you pulled all the equity out of your home? All those things matter to me. And that's going to help me determine how much cash I want to see. If you don't have a lot of debt or any debt at all, that number is probably going to be lower than it would be for somebody else. So 6 to 9 months of living expenses, how do I determine that? I'm going to see what the minimum monthly payments are in your credit report. So it's not, your country club membership or your kids' education, if they go to private school. It's not that. It's strictly what debt do you have outstanding?
Got it. And then from
So
there, then go ahead.
I was just gonna say, I wanna get the call from everybody, even, people that maybe think they wouldn't qualify. I love talking to them and helping open their eyes and see how they can qualify. Because we are looking 50% of our decision is, are you a good credit candidate? The other 50% is, can this facility pay back this debt? So if you make $40,000 a year, you've had the ability to save, 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 or maybe a rich family member left you some money. Great, you've got cash to spend. Can you come to me and borrow $1,000,000 for the self-storage loan? Yes, absolutely, all day long. And then we want the big, the big net worth individuals as well.
Wow. Okay, so what kind of credit score are you talking?
So
720?
650 is our minimum.
Okay,
Hmm. Yeah.
got it.
Yep.
Um,
And your credit matters. We want to see like clean credit reports are important to us. You're putting, it's not the only thing, but if we can only judge you in 6 or 8 ways, that's one of the pieces of data we're using. Right. And so if you don't have good credit, I would encourage you to start working on, there are programs out there to help you build up your credit and learn what credit is and why it's important.
and what kind of plan do you wanna see from me? I mean, do you help me underwrite this asset as well, or is it maybe I've gotta bring X to you, what are you looking for? And then you start asking me questions to confirm how I've underwritten it, or how does that work?
It's a good question. So we are consultative in nature. However, I can't underwrite people's deals for them. So in an ideal world, I want you to have a signed LOI. I want you to understand what you're buying, and I want you to be able to present to me why you like this deal and why I should do this loan for this deal. And then I will work very closely with you to make sure expenses make sense, make sure you've thought of everything. Did you think about snow removal? Have you actually gotten a really good insurance quote? Have you talked to the county about what taxes are going to look like? That's the biggest thing I would say right now is taxes and insurance between a seller and a buyer, probably the biggest differential. So I really want you to get good numbers because I don't want you to close the loan and then find out that your tax basis changed and now your taxes doubled and then maybe the deal doesn't work.
Yeah,
I will
that's not
work with people. Yeah, yeah.
Alright, anything else you wanna add or share that I'm not asking you?
Are you gonna ask me, I think we kinda talked about, like, problems that we're solving. Was that kinda next up, or
I mean, yeah, if you
do you
wanna
want me to
share with me, "Hey, Chris, this is yeah, I'd love to hear a hypothetical example or a real one where you're like, "This problem came up. This is what I did to solve it, and here's how we went about going to do that."
Yeah, so I think one of the common things that we see in this industry is deals falling apart at the last minute, and that is something that we're able to solve for, I think, better than other banks are. I had a deal come to me last year. This gentleman was doing a conventional loan with a local credit union, and I don't know the circumstances, but truly a week before they were supposed to close, that bank reneged the offer, and they were left high and dry. And I happened to know him, so he called me. I had already looked at the deal. He was just going with a different lender than me. So I already knew him. We had a relationship established. I knew I liked the deal. I had already given him terms on it. So I closed that loan for him in 15 days. That's a little bit unheard of. I don't want anyone calling me and being like, "Can you close this loan for me?" Because we do get this a lot. The seller wants to close in 30 days. Oh my gosh. But it is something that we do solve for. So when you get a term sheet or a proposal letter from me, you've got a bank behind you. I'm not giving out proposal letters willy-nilly. And I know I can close, I know how to close loans. I know what's going to get approved, what's not going to get approved. We were able to close that loan in 15 days. My closers, my underwriting team, we all sit together. I walked to the underwriter and the closer and said, I know this is going to be really painful, but can we do this for this good customer? And we
And
did.
you
And
got it
I'm
done.
really proud. 15 days is unheard of. Now,
That's
they
great.
had their appraisal and their environmental. So they had a nice clean package that they were able to, give to me. So that helped. You have to have that. So
And how big was the deal?
that one, oh, maybe 1.5 million.
Nice.
Yeah. Yeah.
That's inc
Yeah.
so you're definitely on his Christmas card list.
Yes, absolutely. Oh, he uses sings our praises now. I think he was really that's a tough call to get for a bank to say to kind of back out that last minute. That's that's a tough call to get. So I definitely feel like we say we know who we are. We tell you who we are up front. And if I tell you I like your deal and I can get your deal approved, then I'm not messing around.
That certainty is super valuable, it's important.
It is, yes. Yeah, and I have a team behind me. That's where's our whole team are all self-storage specific. So underwriters, closers, credit officers.
Nice. So with that being said, if people wanna reach out to you to either close a deal in 15 days or they want your help, how do they go about doing that?
So email is my preferred method. Please email me and I'll get back to you as soon as I can with I just give a link to my calendar so people can schedule a call with me. I also am hosting weekly office hours now. So if you're not under contract or under signed LOI, I might direct you to my office hours. You can come in. You may be the only person on the call. It depends on how busy I am at that time. But that's a great place just to go through. I do a fantastic PowerPoint that talks about how to qualify, how you qualify, how does the project qualify. I tell you exactly what we're looking for. And it's a good way for just to get general questions answered. And then certainly I do personal calls all the time with people that have maybe a unique situation that they need to find out about personally, or somebody that's under contract. We're going to move fast. We're going to have a call
Nice.
within 24 hours of you reaching out to me.
So how do you sign up for office hours?
I am posting them on my LinkedIn page, the
Okay.
dates. So you just kind of go through. I don't like to do too many LinkedIn posts, but if you go back through there, I'm doing one a week right now. So there'll be a different date, and I'm just making the dates and times vary. I have customers all over the United States. We're headquartered here in North Carolina, but I work in all 50 states. So I try to be conscious of my California, my West Coasters. So, mm,
So it's not like 5 in the morning, so we appreciate that. Thank you.
you're welcome. I know I got to keep my California people happy.
Anne Mino, you saw her email there just a moment ago, so definitely email her if you got any questions, comments, and again, you think SBA is the right path for you to go. Brett Henry utilized SBA very, very successfully. And again, subscribe to the YouTube channel here. I'm Chris Berg. This is the Self Storage Report. We'll see you back here next Thursday.
Thank you.